Happy New Year, everyone. We are jumping right into 2025 by looking at some of the first big financial news of the year. Think of it like a snapshot of the global economy. A mix of some optimism and some serious question marks. We've got reports from Breakingviews, U.S. Steel Corp, Apple Inc., and a whole bunch more, all kind of pointing to a world that's at a little bit of a crossroads.
Yeah, it is fascinating to see the back and forth, between these positive economic indicators we're seeing and then some pretty big political moves. It's like everyone is trying to figure out what the rules are while the game is actually changing.
Right, yeah. On the one hand, we've got reports of global economic growth and that inflation is finally cooling off. But then on the other hand, we have governments dealing with a ton of debt, which is making central banks really hesitant to start lowering interest rates. That's got to be a tough spot to be in.
It is, yeah. It makes for a very precarious balancing act. Breakingviews even suggests that this tension could mean some serious market volatility. It's kind of like, imagine a seesaw. On one side, you've got economic optimism, and on the other side, you've got all this government debt. And right in the middle, you have the markets trying to find their footing.
So what does market volatility actually mean for someone listening to this right now? Like, let's say you're thinking about refinancing your mortgage. Or maybe you're really invested in tech stocks. Could this volatility actually impact those decisions?
Absolutely, yeah. For someone thinking about refinancing, it could mean that interest rates won't actually fall as low as they might have, or they could just change a lot more than expected. And for investors, it could mean their portfolio is going to have a bumpier ride, especially in certain sectors that are very sensitive to interest rate changes and to economic uncertainty in general.
Okay, so maybe we should all be brushing up on our economic juggling skills. Let's switch gears, though, to a story that really caught my eye. President Biden blocked the sale of U.S. steel to Nippon Steel. And we're talking a $14.9 billion deal here. It's not every day you see a move like that.
Yeah, and this is where things start to get really interesting. It goes way beyond just the money. For Biden to block the sale, citing national security concerns, it's a pretty big statement. It signals that things might be shifting towards protectionist policies, which would put more of a spotlight on domestic industries, and that could end up really impacting international relations.
Exactly. This isn't just about one company or even just one industry. You could have ripple effects everywhere. Like, how might this impact other companies in the U.S. that are looking to work with Japanese companies? Or what kind of message does this send to other U.S. allies about future trade partnerships?
Yeah, those are some really important questions.
You think?
This move could create a lot of uncertainty for businesses that operate globally. And yeah, it could strain relationships with important allies. You can almost think of it like a chess game, where each move has consequences that go way beyond just the immediate board.
Speaking of global chess games, let's look at the tech world. Apple seems to be struggling a little bit in China. iPhone shipments have fallen for the 4th month in a row. And Apple is now offering some rare discounts to try and boost sales. You don't see that every day from Apple.
Yeah, it's definitely worth noting. It's not just a random thing for Apple. I think it reflects a larger trend. Chinese tech companies like Huawei are getting more popular, and now foreign brands are facing some serious competition.
So is China becoming a tougher market for international businesses, especially with these tariffs looming over the upcoming CES trade show?
I think it suggests that, yeah, the Chinese market is changing, and companies really have to adapt their strategies to be successful there. These tariffs just add another layer of complexity to everything. They could affect supply chains and costs, and that would end up impacting the prices that consumers pay. It's a lot to deal with.
It's a lot to take in, for sure. But before we get too bogged down, let's look at an industry that's actually doing pretty well. U.S. auto sales are at a 5-year high right now. That's going to be good news for the economy right now.
It might not be all good. While the rebound in auto sales is good to see, and it has been fueled by inventory recovery and by these new incentives, the threat of those tariffs could still mess things up. Imagine you're a car manufacturer and you're trying to plan your production, but you don't even know how much your steel is going to cost you next month, or your electronics. That creates a ton of uncertainty.
And then there's Tesla. They're having record sales in China. But globally, their sales are falling. It's almost like these two completely different worlds.
Yeah.
What do you think about that?
It just highlights the shift that's happening in the global EV market. Domestic players are starting to gain traction in some really key markets. And that's challenging some of the big companies that have been around for a while.
It's fascinating to see these dynamics play out. So we've got global economic growth that could be facing some headwinds, political moves with global implications, and these giant tech companies dealing with a changing landscape. What does all this mean for the average person listening right now? The person just trying to make sense of everything.
I think it means that staying informed and being adaptable is more important now than ever before. We are seeing economic, political, and technological forces all coming together, and that's creating a very complex and constantly changing landscape.
Yeah.
It's like you're trying to read tea leaves, but the cup keeps changing shape.
Exactly. It's a constant learning curve. Okay, so we've talked about some pretty intense stories so far, but let's take a breather and look at a couple interesting company-specific developments. Papa John's is making a comeback in India after pulling out a few years ago. And we have Skydance Media and Paramount planning a merger. What's the story there?
Well, these smaller stories actually reflect the bigger global trends we've been discussing, like Papa John's return to India. That shows the growing middle class in these emerging markets and how consumer tastes are changing. People aren't just looking for familiar brands anymore. They want quality, variety, and they want a localized experience.
So Papa John's probably had to completely rethink their strategy for India, right?
Yeah.
It can't be as simple as just opening up the same pizza places they have in the U.S.
Exactly. And their success or failure is really going to depend on how well they adapt to the Indian market. It shows that global expansion needs more than just a good product. You need cultural understanding, strategic partnerships, and you have to be willing to adjust to those local tastes.
Makes sense. And what about that Skydance Media and Paramount merger? What's driving that, and what does it tell us about the entertainment industry?
That merger shows the consolidation that's happening across the entertainment landscape. Streaming platforms, production companies, studios, they are all fighting for dominance. And mergers like this let them pool their resources, expand their content libraries, and compete more effectively.
So is it kind of like survival of the fittest in the streaming jungle?
In a way, yes. It's such a competitive market, and those who can adapt and get bigger will have a real advantage.
Okay, before we wrap things up, I always like to see what the analysts are saying. It gives us a peek into how the market is viewing these developments. And we've got some interesting analyst ratings changes to talk about. 3M seems to be facing some criticism. Block Inc. is on the rise. And Citigroup is supposedly ready for success.
Analyst ratings can be helpful, but you gotta remember that they're just one piece of the puzzle. Think of them as opinions, not like a crystal ball.
Right. So we shouldn't just blindly follow these ratings.
Right. Exactly. It's important to understand the reasoning behind them. Look at the analyst's track record and do your own research before you make any investment decisions.
So when you see a headline like "Analyst Upgrades Block Inc. to Buy," don't just run out and buy the stock. Instead, ask yourself, what's making them upgrade it? What are the company's financials like? What's their growth potential?
Exactly. Be an informed investor, not just a reactive one.
Okay, so we've covered a lot today. From global economic trends to stories about specific companies. It's been a whirlwind tour of the financial landscape.
It really has. And if we can take away just one thing from all of this, it's that the world is always changing.
Yeah, it really is like we're living in a time of so much change. And it can be kind of overwhelming, to be honest.
It really can. But even with all of this going on, there are still so many opportunities for growth and innovation. Companies are adapting to the changes. New technologies are popping up all the time. And consumers are driving change with the choices they make.
So it's not all bad news then?
Not at all. It's about seeing the challenges, but also seeing the possibilities. The key is to approach it all with curiosity, be open to learning new things, and don't forget a little bit of skepticism.
So what does all of this mean for someone listening to this right now? Someone just trying to figure out where they fit in.
It means being an active participant in this changing world. It's about staying informed, thinking critically about the information you come across, and then making decisions that match your own values and goals.
Okay, so what would you recommend that someone actually do? Like, should they change up their investments? Should they think about a different career? Should they learn a new skill?
Those are all things to consider. But the first thing to do is just look at your current situation.
Okay.
Think about your financial goals, your career goals, what you're interested in. What are you good at? What are you not so good at? Are there any areas where you could use more knowledge or experience?
So it's about taking a step back, looking at the big picture, and then deciding how to move forward based on your own individual situation.
Exactly. There's no magic answer that works for everyone. But if you're proactive and you stay informed, you can put yourself in a position to not just get through the tough times, but to actually thrive in this kind of environment.
I like that. Thrive, not just survive. That's a great way to put it. So as we move through the rest of 2025, let's remember to stay curious, stay informed, and be adaptable. The world is changing fast, but that just means there are more opportunities to learn, grow, and make a difference.
Well said. And one more thing. Remember that you don't have to do any of this alone. There are resources, experts, and whole communities out there to help you along the way.
Thanks for joining us for this deep dive into the first big news of 2025. Until next time, happy navigating.